What if everyone stopped paying taxes for one day? It sounds simple. Just one day. No tax payments, no deductions, no transfers to government accounts. What could really happen in just 24 hours? More than most people realize. Modern economies don't run on large cash reserves sitting in vaults. They run on continuous flow. Taxes aren't collected once a year and stored safely. They move constantly, funding services in real time. Every single day, governments expect billions to arrive through income tax withholding, sales taxes, corporate payments, and transaction fees. If that flow suddenly stopped, even for one day, the system wouldn't quietly pause. It would jolt. The first impact wouldn't be visible to the public. It would hit financial systems. Governments rely on predictable revenue to manage debt payments, bond markets, and daily operating costs. If expected tax inflows didn't arrive, financial institutions would immediately flag liquidity risks. Bond markets could react within hours. Government bonds are considered among the safest investments in the world because they're backed by reliable tax income. A sudden interruption, even temporary, would signal uncertainty. Investors don't wait to see what happens. They react instantly. Markets could drop, borrowing costs could spike, and currencies could weaken as confidence wavers. But the deeper effects would show up next. Most people assume governments have massive stockpiles of cash. In reality, many operate with tight, daily cash management, similar to large businesses. Money comes in and goes out continuously to pay salaries, fund hospitals, maintain infrastructure, and run public services. Without tax inflows, governments might need to borrow immediately just to maintain normal operations. That borrowing costs money, and even a single day of disruption could ripple into higher long-term interest costs for entire countries. Then there's the psychological impact. Economic systems rely heavily on trust. People pay taxes because they assume others will too, and because they believe the system is stable. If everyone stopped paying at once, even briefly, it would introduce a dangerous question. What if people don't start again tomorrow? That uncertainty alone could trigger policy responses, emergency financial controls, or even temporary restrictions to stabilize systems. And here's the strange part. Most of the visible world wouldn't change immediately. Police would still respond. Hospitals would still operate. Trains would still run. Because those systems don't shut off instantly. But behind the scenes, financial pressure would begin building like turning off the water supply to a massive city. Nothing breaks at first, but the longer the flow stays off, the more fragile everything becomes. This scenario reveals something most people never think about. Taxes aren't just payments. They're the circulatory system of modern society. They keep money moving through services, infrastructure, safety systems, and economic stability. When that flow stops, even briefly, it exposes how interconnected everything really is. Not fragile in a dramatic sense, but dependent on continuous trust, participation, and timing. Because modern economies don't work like savings accounts. They work like living systems. And living systems can't stop flowing, even for a day.